Hello. We are waiting for the webinar to start, but just to double check if you can see and hear me.
Hello, good morning, guys.
Hi, runners. Okay, I can hear you and see you. Can you hear and see me?
Yes.
Yes, well, everything's perfect.
Okay. Hi, Conrad. Good.
Hello, hello.
Let me also try to share my slides.
Yeah, sure. Yeah, we can see it.
Okay, great. Good. Then all works. So let's wait for everyone to join.
Yeah, sure.
Okay, so this is the time to start the webinar. So let's slowly start, but let's wait for the other people to join. So maybe let me share my screen. Okay, great. So we're here to all together celebrate the Internal Audit Awareness Month that was in May, but we extended it so to make a larger celebration. And together with the ACFE Baltics IIA Latvia and AuditSolutions, we're happy to be conducting this panel discussion webinar for you. Before we start a small organizational topic for GDPR purposes, just a note that the webinar will be recorded. So if somebody is not okay with that, please explicitly let us know. Okay, so maybe let's do a small round of introductions before we jump into the topic. So I can start, and then I would pass the word to each of the panelists, maybe to say a couple of words about you and your experience in terms of internal audit, internal controls, and anti-fraud, because the topic of the discussion that we have today is the role of internal auditors in identifying and mitigating fraud risks and typical red flags and effective anti-fraud mechanisms. So I suggest that we do a brief round of introductions. Okay, so let me maybe start. So my name is Alex Movchan. I'm the president of Association of Certified Fraud Examiners in the Baltics region. And basically having 18 years of experience, started with external audit, moving to internal audit, and now I'm with internal controls and anti-fraud. So this is in a nutshell. Dear panelists, who would like to volunteer and go next with the intro?
Maybe I will take the floor. First of all, good day to everyone, to every participant, to every panelist. I'm delighted to be here with you and hopefully to share my experience and also to listen to your experience as well. As you can see, my name is Konrad Knedler, and well, I like to think of myself as a flesh and bone internal auditor. At least this is my aspiration. But seriously, indeed, I've been practicing profession for over 20 years and combining experience in private and public sector, delivering both assurance and typical consultancy. Also setting up and developing internal audit functions, also supervising them as audit committee member. For a number of years, I served the community as I Poland president and board member. But currently, I'm an expert and board member at AuditSolutions, also co-organizer of this event. And we offer internal audit outsourcing, CIA training, risk management, and internal control implementation, quality assessments, and other audits, with particular focus on SOC 2 audits, which is American standard-based audit for service providers. So thank you very much.
Thank you, Konrad. Who would like to go next with the intro?
Maybe I will go. Okay, sorry.
No, please continue.
Okay. So, Mirek Stasik, I will go quite shortly because I'm conducting the audit solution together with with Konrad, who has just made the intro, so I'm not going to repeat it. Just a brief information about myself. I started my journey with audit over 20.
Sorry, Mirek, we cannot hear you. There is some problem with the sound. Renners, maybe you can go next, and then when Mirek gets back with his connection, we could pass the word back to him.
Yes, sure. So my name is Renars Degro. I have more than, I don't know, 18 plus years of experience. I've also started in external audit, then moved to internal audit. My experience is mainly in banking and finance. I have worked from the control side and also from the business side. Thus, I have experience from both sides, right? And I know how hard it is for internal audits and people that set up risk management to actually do that, and also how hard it is for business to implement all their regulatory requirements. And I also have this experience when the business kind of does not understand how the risk management works and vice versa. So it's always very important to have this clear transparency, set goals, and have a very good tone at the top in order for the internal controls work and to mitigate all the risks internally, including the fraud risk. Today here, I'm from the Internal Audit Institute of Latvia. And that's basically it about me, and happy to have more discussion during the panel today.
Thanks a lot, trainers. Much appreciate that you found the time to join during the Midsummer Eve, so a holiday in Baltic.
Yes.
So happy Midsummer Eve.
Yes. Sorry about the outfit. It's like in the countryside, and it's yeah. So
good. Who would like to go next? Cedric, maybe you can take the floor.
Yeah, I can go next. So I'm Cedric Hamakers, CEO of IIA Belgium, and co-founder of Fastlane, a software company that makes audit software for small departments. And 15 years of experience in internal audit. I briefly did some external audits as well, but soon discovered there was more joy in internal audit, basically, and never left afterwards. So in big companies, small companies, I had my fair share of participating in investigations and so on. So I'm very, very happy to be in this webinar to share some practical insights as well with all of you. So thank you.
Thank you, Cedric. Happy to have you with us. Good. Karina, maybe you go next.
Yes, I will try. I hope you hear me well.
Yeah, we do.
I have to apologize. I'm in a very unprofessional environment. I'm currently at the Brussels airport. Summer solstice is a magic night. So if runners is just wearing the hunter's costume, I found myself today in the morning in a different city. That happens. So I hope you hear and see me well, and I will mute myself when I'm not speaking because, the airport is not the quietest place here. But briefly about myself. So my name is Karina Misko. I am currently the president of IIA Latvia. We are managing the institute together with runners, and I've got a job as well. I'm head of internal audit of the biggest municipal company in Latvia, Riga Satiksme, which is providing the public services, public transport services in Riga, all the bus, trams, and trolleys. So it's a big thing to look after, to be honest. And I started at external audit more than 20 years ago at PwC, and then switched to finance and accounting, and back to audit, but back to internal audit for some years now. Looking forward to the discussion, and I see that some Latvian names are joining, so it's not that bad. I thought it will be totally empty today because it's the quietest day in Latvia today, to be honest.
Thank you, Karina. You see, the topic is so interesting that people even joined during the holiday. So I'm really happy.
Surprise.
To have the participants joining, and to have, I think, participants from many countries, Latvia, but also other Baltic countries and Poland. So looking forward to our discussion. Small organizational topic. We'll be sharing the slides and some information from the partners of this meeting. So please expect to get the slides. And with that, let me start. So what are we talking about today? A brief intro. So first, I will share some slides to warm up the floor. So I will talk about how much does it cost not to react to potential fraud risks. Then how does fraud actually happen? Then after this intro, we do the panel discussion, and after that we summarize with the role of internal auditors regarding fraud risk on basic and advanced levels. And regarding the questions, so there would be specific moments. So basically after the intro and then after the discussion, we would be happy to take the questions. So please put them in the chat, and we would be happy to take them when the time comes. So with that, let me start. So first, how much does it cost not to react? So why do I want to start it like that? So first of all, because I represent Association of Certified Fraud Examiners, so the biggest global organization that examines the fraud globally, and we issue the report to the nations, and you can see the extracts from this report, so we actually know what fraud costs to the organization globally. And secondly, probably this is the question you get from your boards when you come with the anti-fraud program with a suggestion to implement something new. The question is, okay, but like, why do we need to do it? And this is a good answer because it costs organizations typically around 5% of revenue that they might lose because of the fraud risk, even if this fraud is undetected. So you might know that it exists or you might not know that it exists, but still this is the standard loss that organizations typically have. And this figure is based on around 2,000 cases globally. So this is a big number, representative number, and to build on that, basically the total proven losses in 2024 were around 3 billion USD, and around 22% of the organizations where fraud was detected had losses above 1 million US dollars. So quite significant losses, which shows that fraud is a big thing, a material one. And on the right side, you can see the duration of fraud and the materiality. So high level, we can say that the longer fraud lasted, typically the higher the median loss was. So you can see that up to 24 months, it's around 100,000 USD, and then it jumps dramatically to 300K, and then to 700K later on. So high level, the longer it lasts, the more it costs, and that's why it makes sense to detect it rather sooner than later. Talking a little bit about the geography, I refer here to the Transparency International Corruption Perception Index because it shows more or less the temperature in the room. It's the I would say best global study that colors certain countries with certain colors. They primarily focus on the corruption risk, but as we know, corruption is one of the three key fraud risks, and I would extrapolate it to overall environment in these countries. High level, we can see that the corruption risk is rather lower in Western Europe and North America and Australia, while higher in Africa, Latam, and Central Asia. These are the overall this is the overall summary, but if we look at the trends, we can see that while the short-term trends, the changes are not so big, so they're like 2.5% changes year to year, but the long term, we can see some concerning trends in our region. So if we have a look at Poland and Germany, we could see a steady decline. So the decline means that the risks are going higher. So the lower points the country gets, the higher is the risk. So this is how this report works. We can see some positive trends in Latvia and Lithuania. So Latvia last year it was a little bit lower, but overall the trend is uprising. So to put it in a summary, I would say that for our region we are high enough in terms of anti-corruption, but the trends are alarming. So we could use it to say that this is actually quite an important topic for our region, becomes even more important at the moment. And some specific real-life cases. So what stands behind the data that I referred to previously? So you could see that recently there were quite a number of big cases in terms of fraud or potential fraud. So let me maybe refer to the Revolut case. It's from Lithuania. So you know that's the big neobank, and basically they were fined for 3.5 million euros by the Lithuanian regulator for not having the good controls in place to prevent money laundering and fraud. So this is an example where actually fraud did not happen, but because they did not have the proper controls in place to prevent it, they were fined, and this is actually the biggest fine ever issued by the Lithuanian National Bank. So you can see that real cases happen in our region. And basically, a simple message to bring to our owners and executive board is that you need internal controls, anti-fraud controls, not to appear in the news and scandals and bankruptcy sections, such as the companies that you mentioned, that are mentioned on this screen. Okay, but how does fraud actually happen? Basically, the fraud is a combination of any of the three elements of the fraud triangle, being basically the opportunity, which refers to the access to the assets or financials, which is combined with the lack or loose controls, which basically allows the fraudster to commit the fraud and stay undetected. The next one, the next part of the fraud triangle is the pressure or motivation, which is basically something that pushes the fraudster to commit the fraud. This could be something that motivates. So, for example, the fraudster wants to get a gain, or some pressure, for example, financial difficulties with which pressures the fraudster towards unlawful activity. And the last one is the rationalization. So this is basically the ability of the fraudster to explain to him or herself that what he or she does is basically necessary evil, so it's not so bad. So this is something which is part of the psychology of the person. So you can see that basically 2 out of the 3 elements of the fraud triangle are rather in the psychology area than in the logic area. So that's why it's important to understand that we need to act on all the 3 parts of the fraud triangle, because even if one of the parts is not in place, fraud will not happen. So all the 3 needs to be combined. Next one is basically the difference between the fraud risk and the overall operational financial risk. So what I want to highlight here are 2 points. This is the intent and the illegal nature. So basically, if we're talking about the standard financial or operational risks, these typically happen due to mistakes or errors, which is the lack of concern or attention, or the lack of proper knowledge or training. So the person didn't want to do it just because they were tired or they did not have the knowledge, it just happened. And then in terms of the fraud risk, we are talking about the intentional act. So the person wants to do it, and this is the intentional omission, for example, or an intentional act, and this is typically having an illegal nature, which means the person is doing it knowingly, and they will be hiding the evidence of their illegal activities, which means that in order to identify standard operational financial risk, you just need to double check. So somebody knowledgeable just needs to pay attention. And in this case, the controls like a 4 eyes principle or periodic reconciliation would be good enough. In terms of fraud, because the person is typically hiding the evidence, this is not enough just to check. You need to actually know how the fraud schemes look like, that you know where to look and how to check. So that's why it needs one level deeper evidence and one level deeper knowledge. So to summarize that, fraud is an intentional act and evidence is typically concealed. That's why it's hard to detect, and that's why we need to have specific knowledge about the fraud red flags, so where to look at, fraud schemes, so how to look at, and that helps us to be able to detect and prevent fraud. With that, I move to the self-assessment questionnaire, which actually allows you to ask these questions to yourself. So whether, in your opinion, these specific situations take place in your organization, do you have the necessary controls in place, and so on. And while you're thinking of that, we will be slowly moving to the panel discussion. But before that, let me have a look at the chat and see if there are any questions to the intro. You don't need to take the screenshots. We'll be sending these slides. So give me a second. Okay, I'm looking at the chat for the questions. Okay, a number of greetings from UK, from Poland, from Ukraine. So happy to see everyone here. We don't have any questions for the moment. So let's start the discussion. And maybe let me refer first to Konrad, because Konrad, as you mentioned during the intro, you were the president of IA Poland, and thus you have very good experience of the internal, so GIAS, so the Global Internal Audit Standards. So what actually the standards say about the role of internal auditor in terms of detecting and preventing fraud? Is it like the key activity of internal audit, or is it some additional activity? So what is the, let's say, level of the standards? How high do we need to put the bar?
Okay. Thanks a lot, Alex, for this question. But maybe I will start with, as a proper internal auditor, with kind of a disclaimer, because global standards are pretty new. So they came into force in the beginning of this year, which does not give us a long-lasting line of interpretation how to implement them. So we are all struggling how to implement those standards. So there might be a certain point of reference in the former set of standards, which are IPPS. But also you can refer to practicalities. So when it comes to reality, you can see two opposite standpoints in this respect. Number one. Number one states basically, I'm an internal audit, not a fraud investigator. I'm into systems, not transactions, and I do not want to have anything in common with fraud. So this would be one standpoint. And the quite opposite standpoint is that the combating fraud is a key internal audit responsibility. So I'm going do fraud investigations. I will take care of hotline. I will develop an anti-fraud policy and monitor how members of the organizations apply it. And certainly between those two standpoints, there are many other not so radical options. So let's perhaps have a look at the standards themselves, how they treat this situation. So I'm going to share with you the screen with a short summary with the from the standards. Just a second. Not so easy to navigate this. Hopefully you can see it. Can you?
It's not yet there. Okay, now we can see it.
Okay, so maybe I will start with the definition of fraud. You can see it in the top of the slide. Alex has already gave us a certain view on the fraud definition, and what you can
Konrad,
see.
sorry.
Yep.
Can you make it a presentation mode because it's not visible
Sure.
enough?
Is it any better?
Yeah, it's much better.
Wonderful. So what you can see here is definition of fraud coming from the former set of standards, IPPF. And on the right side, you have a current definition. And you could see substantial change. And the change refers to the illegality. In the first definition, you can see that the fraud is any illegal act. So this is the former, the old definition. And in the current definition, you can see that it's it could be either unjust behavior or illegal, which in reality, fraud becomes closer to ethics violations. And this has certain value in real life. What next you could stem from the standards themselves? You could see that as internal auditors, we are required to develop our competencies, among others, competencies related to pervasive risks such as fraud. So in the older version of standards, we are supposed not to be experts on frauds, but we had to have certain knowledge of fraud risks. So this is sustained. So it's almost the same. And also, it's not only the matter of competence or knowledge, but it's also a matter of due professional care, which means that we don't not only we have to know about fraud risks, but we have to apply it in practice. And by application in practice, I mean that first of all, that we need to include into our assessments of risks, certainly risk of frauds. What else do we have in the new set of our standards? In terms of planning, I mean the macro levels planning, which is our annual planning or strategic planning. Our plan must consider coverage of fraud risk. So once again, when you think of what you are going to do in the next period, you need to consider whether certain areas are of higher risk value. We also have another standards, the standards which is titled communicating the acceptance of risk, which is the situation when you as an internal audit think that there is a major risk, but basically management disagrees with you. And there's a certain conflict between you as an internal auditor and management. So after some consideration, you might decide to report over the heads of management to the board. And then you have a certain guidelines coming from the standards. So when the risk exceeds the risk appetite, the impact may include fraud. So the reason why you decide to report over the heads of the management to the board could be the fraud. So this is rather important. And the last standard in which notion of frauds appears is a standard about actually the engagement risk assessment, which is the planning phase. So the standard states that internal auditors must identify the risk to review by considering specific risk relating to the frauds, which in reality it means that you need to consider fraud risk in your audit assignment risk assessment. Okay, I'm stopping I'm stopping for the time being the presentation or the slides and trying to go back to what I was going to say. So what you are seeing in the slides, there were typical audit roles, and they could be summarized in the following way: be competent in fraud risk, and secondly, consider fraud risk in your risk assessment, both at macro and micro level. And this is a typical audit role. But if you identify fraud risk in your assessment, just take care of this either in organization level assignment or in your process-based auditing. But sometimes you're required by your organization to go beyond those roles. So what those responsibility going beyond those roles could look like. It could be firstly fraud investigations, or for example, setting up anti-fraud strategy, implementing anti-fraud measures like whistleblowing arrangements, or for example, administering the whole fraud combating policy. So what to do in this case? We are fortunate enough that we have certain guidelines coming also from the standards themselves. Once again, I will try to display it.
Konrad, I see a comment asking you to a little bit
Sure.
speak up, to be louder. I mean, I can hear you well, but I see some comments. If you could please speak up.
Okay, I will do my best.
Thank you.
Okay, so in this slide, I'm showing you how the standards try to explain this non-audit roles issue. So when someone, for example, requires from you as internal auditor or chief audit executive to take a role of fraud investigator in your organization, certainly you need to consider it. You need to take it into account. You have to find pros and cons. And the guidelines looks as follows. First of all, it has to be documented in internal charters. So if it's not, your first step is to go to your internal audit charter and to change it. And of course, this has to be authorized by the board. And secondly, you need to have certain safeguards. In the former version of standards, you actually had a choice between different safeguards. In the current version, you don't have any choice because safeguard is one. And this is an alternative process to obtain assurance. And this alternative process to obtain assurance basically equals to external provider. So if you are involved in anti-fraud policy or fraud investigations, it means that you will have to have an external assurance providers who could review if your job is performed properly. Even if this non-audit role is temporary, you still need this kind of external assurance. And the period is not limited actually to the period of your responsibility, but to additional 12 months. So this is the guidelines from the standards themselves. To sum up, if you don't have an extra competencies, so for example, you are not a CFE or ex-cap or other law enforcement officer, stick to the traditional role. If your organization needs such competencies to just do your best to get them, discuss it with your board and see what you can do about it. If you however have anti-fraud expertise and this is desired by your organization, try to be involved. But bear in mind that there are limitations and you need to have safeguard to protect your independence. So this is my view on the perception of the current global standards. I'm happy to take any questions if there are any.
Thanks a lot, Konrad. I think let's take the questions later on during the Q&A part. And now we understand what actually the standards require. And with that, I would like to pass the word to Karina, because Karina is leading internal audit function in the large governmental company. So basically, we know that from the report to the nations, corruption is the highest the highest in terms of both occurrence and the impact fraud risk. So basically, Karina, in your view, how do internal auditors in government or organization can help with fraud prevention detection? Maybe you have some specific cases that you can share with us. So what worked, what didn't work? So maybe you could a little bit elaborate on this perspective as the government organization auditor and in terms of corruption risk detection and prevention.
Yeah, thank you. It's a very good question because I think no one likes to speak about corruption. It's like a hot potato, you know. Everyone knows it exists, but no one wants to touch it. It's too sensitive topic. Maybe not that much for private companies, but for public sector for sure. Because when we speak about corruption, as auditors, we should always remember it's a huge reputational risk for a company. If, let's say, we say there are three main types of fraud: assets misappropriation, financial statements fraud, and corruption. Let's say assets misappropriation is the most common one. Financial statement fraud is the one which gives the biggest, let's say, loss impact on the company. But I think corruption is something, is the type of fraud which gives the biggest impact on the reputation of the company. And when we are speaking about the public sector, we are operating with the taxpayers' money. So it's not our money we have earned. We've got it from the people of the country, of the respective country. So corruption in this case is just unacceptable. And it's indeed, it causes the high reputational risk. And reputation, we all know, it's hard to get, and it's very easy to lose. One case, and everyone remembers you, what you did for many years, for a very long time. And I think that the tricky part about the corruption as a type of the fraud for internal auditors is that it's quite difficult to detect that it happened, because corruption is bribery and so on. It's a criminal act, and it should be prosecuted accordingly. And as internal auditors, we are not criminal prosecutors. We are not crime investigators. We cannot do that. And I'm sorry, Alex, I will use you as an example just to give it a bit practical, practical side. If I do an audit, I test something, and I see something suspicious that Alex did something, I don't know, something gives me a wrong feeling, and I say, Alex did this because he got a bribe for that. Alex goes straight to the court, sues me, and he's right to do that, because that's something what prosecutors do, not internal auditors. So I think as internal auditors, the main focus for us should be, we are assessing the risks, we are assessing the reputational risk, and what we should do is probably not focusing that much on a detection, but on a prevention. Basically, to audit what we are auditing the internal control system in the company. Is it sufficient? Is it complete? How the controls work? So basically, the main idea is to audit and to come to a conclusion if the internal control system in the company is built in the way that prevents the possibility of the corruption. Yeah, if we speak about some practical examples, I think purchasing processes, supply chain is always a high risk, especially in public companies, because public companies are operating with a big amounts of money and a big project. So it's always tempting to get some more beneficial options for some suppliers. I think in many governmental, basically public sector companies, payroll could be, maybe it's not that obvious, but it can be the area for the possibility of the corruption. For example, just a practical example. For example, the employees are working shifts, and there are some supervisors who are assigning the shifts. and you are testing payroll, and you see that some employees, for example, a couple of employees out of 10 or 20, they are all the time they're getting overtime, they're getting shifts during the public holidays, during nights, which is, for example, in Latvia, it's double pay. So why others don't do that? Yeah, that's something that is quite suspicious. You can think what's going on there. Maybe those supervisors are trying to get some, I don't know, some benefit from that. So that's something to pay attention to. But basically, that's as internal auditors, that's what you do. You assess the internal control system and you evaluate if it's efficient or not. I don't know, we as a municipal company, which is a big one, and we have 3.5 thousand employees, we have quite extensive measures, quite extensive controls in place and procedures for the anti-corruption processes. If you want, I can speak on them as well, or we do it later.
Yeah, I think that's a good introduction to the corruption topic, and basically what you mentioned regarding being very careful on saying the word that somebody is guilty, because only the court can identify guilt, right? And also an important point for internal auditor to understand what project are we doing? Is it internal audit? Because there we could take the probability. If something is probable for us, this is enough to put it in the audit report. But if we see that there is a potential fraud involved, I do believe that we really need to either get this knowledge to be ready to work with the fraud case, because there is a specific chain of custody that we need to keep on the evidence, right? For it to potentially be provided to the court. And secondly, we need to prove beyond the reasonable doubt, because like in a fraud case the level, the bar of the proof should be higher than in a standard internal audit project. So either we get the necessary training to do that, or maybe we take the external experts, so we outsource, we take the forensic auditor on board for this specific project. Yeah,
Absolutely. I think the right way to do, as soon as you see something suspicious, you escalate.
yeah. Good. So thanks a lot for that, Karina. And I would like to ask the question to Mirek, because Karina already mentioned a couple of points, what might work, what might not work. And I know that you have a lot of experience with the quality assessment. So you come to internal audit functions and you basically examine if what they're doing is in line with the standard. So you see the potential gaps that they might have. So basically, from your experience, from the number of quality assessment audits that you have done, so are actually internal audit functions well equipped to be ready with knowledge, with the resources, to be ready to prevent and detect the fraud risk, or there is something lacking? And if something is lacking, so what are those gaps from what you see on the market?
Okay. Hi, Alex, again, and thank you for the questions. Let me just to catch up just a 2 sentences about my introduction. I hope I can be here right now. It's okay
Yeah, I
with
can
the
hear you.
connection? Okay, that's great. So as you already mentioned, I'm focused more pretty much on quality assessment of internal audit functions, but
Sorry, we cannot hear you.
Well, if I can excuse Mirek, he's right now in Bulgaria, which is not his regular state of residence, and probably his connection is not that good as we wish.
Okay, let's give maybe another couple of seconds if he can reconnect, and if not, we could go further and then get back to Mirek later. Okay, so let's then move on for the moment and then come back to Mirek when he joins. We talked about basically the public sector. Now maybe let's talk about the financial institutions because we have experts from different areas here with us. So maybe we can move to Renars because Renars, you work more with financial institutions. So let us know in terms of basically these scandals that we saw here, like Revolut scandal and maybe some other examples that you see on the market. So what are the typical maybe strong sides of the internal audit functions in terms of preventing and detecting fraud, and maybe what are the gaps in terms of like IML activities or certain other controls that you see? So what are the pros and cons, what actually works, and where maybe some improvement is needed in terms of fraud controls in the financial sector?
Yes, thank you for the question. There was very interesting discussions from colleagues, and fraud actually is, well, in my understanding, one of the highest priorities in risks, because if somebody is conducting fraud, well, it's kind of a hard to detect, because especially if that is internal fraud, and the consequences are can be very, very severe. Because, well, typically, well, for example, in this case where you showed about Revolut, right, a very interesting case, one of the largest fines in Lithuania, not in Baltics. So AML, they were fined regarding AML, some insufficiencies. Was there some kind of fraud, internal or external? We don't know, because, for example, you can get an AML fine only if your, for example, procedures maybe are not up to date. Maybe you did not conduct sufficient client identification, client due diligence, right? And who decides that? Well, the regulator decides that, whether your AML procedures are sufficient enough. In this case, has there some fraud happened? I don't know. Probably no, but like I said, fraud, it's very hard to detect. And all these risks, they come, in my understanding, from the top. So let's imagine Revolut. I think they're pretty aggressive in terms of acquiring business, etc. They have a lot of customers to onboard, etc. And the more regulations you have, the less business you have. And it's very important to find this balance between the regulations and business goals. It's very important that the management of the company understands that risk management actually decreases the potential losses in the future. Thus, they can get more profit in the future. Also, they can increase their market share. So but that works only if the management is thinking long term. If the management is thinking short term, and there are managers that are working like that, because, for example, CEOs, board members, they have a specific term. They can work for a couple of years, and if they are aggressive, then they want to make as much as money as possibly they can. So all these controls, especially fraud, etc., they should come maybe from shareholders, the key stakeholders, and they can do that if they have strong controls and a very strong and independent internal auditor. An internal auditor who is not influenced by the board or the CEO, because one particular example, salary is being paid by the board, and the board is generating revenue. It's not the council or the shareholder that technically pays salaries to the internal auditor. So one of the ideas could be that internal auditors can only be fired by some special I don't know, council decision or shareholder decision, right? It would be maybe make their positions more stronger. In terms of maybe some fraud risks, right? So I would like to distinguish internal fraud and external fraud. Internal fraud it's very hard to detect. And for example, as Karina mentioned, even if some internal fraud is happening, then it's a very good approach to escalate this event to some responsible bodies for them to identify that. But there's also external fraud where some criminals or shady guys, they want to find institutions, financial institutions, like payment institutions, right? That have very insufficient internal controls and exploit this financial institution or payment institution in order to maybe onboard some customers, a lot of customers with some fraudulent identification, and conduct some transactions with no economical benefit, meaning conduct some money laundering, some terrorist financing. And the institution may not even be aware of that, right? And that is why they need to have some strong controls, invest funds in controls, in internal auditors, in maybe some fraud examination. Because in my experience, a lot of financial institutions that fintech, how do they start? They get a license. Well, it happened like a few years ago, but basically all of their business held on Excel. There was Excel spreadsheets, some data warehouses, etc., but no sophisticated controls were implemented. And as time comes, their business grows. And when their business grows, they have problems. They cannot reconcile maybe some initial transactions. They have external audits happening, and external auditors come and ask for some, okay, show me the initial date of this transaction. And they cannot do that because everything is in Excel and everything is not organized. So it is important to invest in compliance. Because in long term, it reduces significantly the costs. And Revolut, let's use Revolut once again. It's a big company. It's pretty, I think they have enough revenue. And maybe there was some pressure from the management, and they could have maybe implemented a bit more in compliance. So well, that's my take about the importance of fraud, internal controls, and compliance.
Thanks, Renars. Yes, I do agree that the proper, let's say, setting the proper risk appetite by the board is the key to successful next steps, like implementation of specific anti-fraud mechanisms. And also there are examples from US, like Wells Fargo Bank, like Silicon Valley Bank, right? That probably the risk tolerance level was too high. And eventually Silicon Valley Bank got bankrupt, and Wells Fargo, being the top 3 bank, they fell down closer to the end of the top 10 list, right? So basically taking too much risk doesn't help on the long term. And yeah, well highlighted. Thanks a lot.
Thank you.
Thanks a lot. So I see that Mirek is back. So basically, Mirek, coming back to you. So we heard from the colleagues some points that they see in the basically governmental section and in the financial institutions area. And you are doing quality assessments in a wide range of business. So what you see, the strong sides and the gaps, are they similar that the colleagues noticed, or they're different? So maybe could you let us know what you see on the market?
Okay, so my perceptions based on more or less over 10 years of quality assessment exercises, and generally speaking, fraud is underestimated by many audit shops, and of course mainly by small teams, but not only. Actually, also quite big, like 20 or 30 people on board. Audit shops are actually also underestimating the fraud risk. And this is visible on both levels. I mean, annual plan and audit programs. And actually, this is one of our most common findings and recommendation from our QAs. So we simply indicate that internal audit should have a better coverage of fraud risk in audit planning and in single audits. Actually, the reality is that, of course, auditors do cover in some way fraud risks, and they generally claim that they are doing that in each and single audit, but not in a direct or explicit way. And I think this is the most, for us as a quality validators, the most important thing, that the coverage of fraud risk should be explicit. It should be presented in the annual plan and also in the plan for a single audit. And this is generally our position as the reviewers, that you should show the coverage of fraud risk at the audit plan level and at this level of single audit. And it is generally not happening, maybe not at all, but it's not happening as it should be. Konrad pointed out, and other panelists also pointed out, it is important topics because standards are saying this, and reality or practice is saying the same, actually. So I'm trying to be as quick and simple and short because of the problem with the connection. So that, I think that's the most important things from my side.
Thanks a lot, Mirek. That's a valuable take. With that, I would like to go to Cedric, and basically Mirek mentioned that typically the fraud topic, it's maybe not always part of the audit program for internal auditors, but maybe let me ask you a question regarding how effective actually is internal audit in terms of detecting the fraud. So is it like on top of the detection mechanism, or it's maybe on the bottom? And then the next part is basically how actually to do it. So let's say that some internal audit function actually has the fraud as part of the audit program. So how do they actually detect it? What kind of red flags from your experience are on the top? What are the top red flags that they should pay attention on during their audits?
All right, thanks, Alex. And maybe let me start first with a small disclaimer. And I basically agree what Konrad said. If you're not an expert in fraud investigations, stay away from it, especially if it's an official investigation, because internal audit and fraud investigations are two separate professions. If it was one, we didn't need two associations, so we could merge ACFE with the IIA, but it's two different professions. And if you want to do fraud investigations, make sure you follow the proper trainings. You have all the right skills to do it. But I do believe that internal audit and fraud investigation, they can strengthen each other, and when they collaborate, and the role of internal audit is super important, because according to the 2024 ACFE report to the nations, which is an amazing document, it's more than 100 pages, but it's super interesting. Internal audit detected 14% of occupational frauds. It's the second most common detection methods after tips, and maybe even more important, the median loss was only, and I put that between quotes, was only $100,000, and lasted only, again between brackets, for 12 months, which is lower and shorter than almost all of the passive detection methods. So internal audit plays a crucial role in fraud detections. Now, unless you are actively involved in fraud investigations as an internal auditor, the role of internal audit is in most cases indirect. It's making sure that the right fraud controls are in place, and not only the hard controls, but also the soft controls. And then maybe just a few practical tips and tricks, because like I said, if it's an official investigation, leave it to the experts. But what can an internal auditor do? And maybe from a viewpoint of a small department with limited budgets, limited resources, no dedicated experts, how can these departments put that into practice. So I would say one is very important: don't silo fraud to specific investigations, but make sure it becomes part of your day-to-day work. In every audit, make sure that there is that fraud look at least. Especially procurement was already mentioned, HR, financial controls. I think those are some that are maybe slightly more, to fraud risk. And then make sure that for every audit, so even if you have a standard audit program for procurement or HR, for every audit, look if there are any specificalities, and make sure you look for every audit a quick fraud check, fraud specific procedures. And then I would say the tools are getting so great at spotting outliers. So use the data. Let technology, let AI, let whatever tools you have available, making sure that you check the data. But leave that also to the data, because some tools are much better than us at spotting outliers. And then use the time that you have left to be a human, basically. So use your human skills. And to be honest, you're not gonna detect fraud by sitting in your independent office somewhere in your ivory tower, but it's really make sure you talk to people. I have spent quite some time at the coffee machine, for example, when I was on locations where I didn't know the people, making new friends as an internal auditor, talking to them. You could just ask, after you know them a little bit better, of course, if you would commit fraud, like if you would have to want to walk away with a bunch of tools from the factory, how would you do it? What would be the easy way? They might tell you where to start looking for. Of course, not a fraudster, but you get so many insights. That is for me very, very important. And even internal auditors without a certified fraud examiner license, for example, or without a COSO fraud risk management certificate from the IA, they can still make a difference. But it's about small things. I would say combining data with being more of a human. Use your skills, use your sixth sense, because many auditors actually have a sixth sense. So I would say that that especially auditors without the proper education can still play a role in how they approach internal audits.
Yeah, good catch, Cedric. Regarding using your, let's say, sixth feeling, because basically a lot of there is a good thing on the YouTube of ACFE interview with a fraudster. So basically, the representatives of ACFE, they talk to the fraudsters who committed fraud, who got into jail, and then basically after their term, they are now, let's say, helping the FBI or the other agencies to prevent fraud. And what they say is basically you need to catch a fraudster, you need to think like a fraudster. And coming to that, I remember in one of the companies what I used to work in internal audit, we got actually such an interesting project that we needed to get into the factory and get out of it. So this was a, let's say, check of their security. So of course the head of security was aware, but the like security guys were not. And actually I almost was able to get in because like my name in the ID was the same as some other employee, like the surname was the same, name was like a little bit different. So I almost went through the security check to get in. But yeah, fine. They identified, but just as you mentioned an idea, asking people how would you actually do it. So that's why we as like junior internal auditors were actually tasked like to try to do it, to test the internal controls, the security internal controls. So interesting experience.
And maybe just another practical tip, like don't just test the theory. One of the best examples is dual signatures. I cannot imagine companies without dual signatures anymore. They have them, two people sign, you can test that, but don't stop there. Ask, for example, an additional question like, when was the last time it was rejected? If the answer was never, then maybe the control is not working as it's supposed to work. So look one step further, talk to people, and observe, and really don't just take something for granted, especially when it comes to fraud, because people are really good at covering it. It was already mentioned a few times. So I think that's really important, and there are more examples in different areas. But the dual signatures, I think, is one of the most common ones where internal auditors say, okay, yeah, it's always signed by two people, so perfect, this control is working. But in reality, when you do a check for double payments a day later, you still identify double payments. So by default, that meant that the initial check was not 100% effective. So always go that step further as an internal auditor, I would say.
Yeah, truly so. Mirek, because you mentioned a couple of points that doesn't work for internal audit, so I think now it's a good point to come back to you and basically from your experience of the quality assessments. So what do internal audit teams typically lack? Because as Cedric mentioned, you cannot do the good fraud investigation if you are not well equipped with knowledge, with experience, with resources. So from practice, what do you see on the market? What internal audit teams actually lack in terms of fraud? Is it lack of knowledge? Is it lack of priority on their audit programs? So what is missing?
Yes, that is one of our typical questions to the people. Why do you not covering this risk? And actually, the most common answers are more or less in line what already has already been said during this webinar. Firstly, I think Rina mentioned that actually audit of fraud risk can be a risky business, to be honest, because in many companies, I think I can risk the sentence that especially in a public sector, you have a formal fraud risk management system, but actually not tested in reality. And actually, everyone in the company is a little bit afraid that the internal audit is going to find that it is not working properly in practice. Also, internal audit. It was mentioned already that it is a kind of a hot potato sometimes, the fraud risk management. And I think the most common reason of not covering the fraud risk properly is that actually, in practice, no one in the company is interested in that because they're afraid of the results that this is not working. So I think that is the most important factor. Secondly, it was already mentioned also that actually the company quite often do not see the benefits of having a real fraud risk management systems. And you have already mentioned that it is simply not true because you can have a cost-effective fraud risk management system which will pay off and actually quite in the short term. And third, I think I can refer to what just Cedric said. Because there is not that clear the limits to which the internal auditors should move to. I mean, the internal auditors are not sure what they should do if they are spotting the red flags. This is simply the lack of practical knowledge, and of course, Cedric already gave the answers. Do what you can do as internal auditor and then escalate or put the things to the professional fraud investigators. That's the simple approach. And of course, because there is a problem with the coverage of risk, there is also a problem with the proper practical knowledge, how to spot the red flags and where to stop. So to sum up, firstly, to my understanding and my knowledge is the case is that quite often the company itself is not interested in having the real information about the practical value of the fraud risk management. Secondly, we just related with the first one. The company or the board is not seeing the fraud risk management like something which can increase the value of the company. I completely disagree with that. And thirdly, auditors are not sure they are a bit afraid of covering the fraud risk because there is always a problem where to stop and what to do with the information further. Yeah, I think that's my answer to your question.
Okay, thanks a lot, Mirek. And we discuss now quite substantially internal audit and fraud detection. So now I suggest to move to the fraud prevention part. And as we know, in terms of prevention, internal controls are on the top of the list as the most effective mechanisms. And with that, I would like to come back to Karina and ask from your perspective, what are the efficient internal control elements that we typically use in order to minimize corruption and other fraud risks? So from the prevention perspective, what you would focus on?
Yes, I did mention already. I think prevention is the most crucial, because I think the most important is the culture in the company. So the more the company invests in the prevention of fraud, the more successful the outcome is, right? And speaking about the internal control elements which are working efficiently, I should say that, for example, in Latvia, for the public companies, we have quite a strict law on public procurement. And it, to a very big extent, it formalizes what we have to do and how do we approach the purchasing procedures, whatever we buy. And basically, the main principle is whatever you want to buy, you should investigate the market, and you should buy at the smallest price, at the lowest price. Well, maybe it's a bit controversial because no one speaks about quality, and you not always get the best quality for the lowest price. But that's the rules of the game, right? For the public sector, you buy at the lowest price. So that's at some point eliminates the possibility of corruption, fraud in the public sector. But at the same time, it's not enough, for sure. And like in my company, we have established quite many internal procedures to complement the law for purchasing and for supplies, segregation of duties for the employees who are involved in the process, material limits, who can sign what, who can sign the contracts, who can order what, to some extent. Also, the limits for the responsibility of the board, because the board is signing all the contracts, the purchasing contracts, and for the biggest amounts, it's the whole board who has to sign. So it should be the decision of the board of the management board, not the single board member, which helps a lot as well. And what else we have is we have established so-called purchasing committee, which consists of several employees of the company who are not involved in the purchasing process, who are not involved in the contract process. One of them is a risk manager who is doing the assessment and evaluation of the supplier, of basically how the supplier was chosen at the end of the process. And it's her in our company. She's giving her last word if it's eligible or not. And basically, the committee reviews all the purchasing contracts, and they do it before the contracts are passed to board to sign, like to review and to sign. So it's another control point, and it works quite well. And we have spotted some contracts which had to be redone and suppliers to be changed at the point of this review. I would love to mention as a good point in internal controls, the employee training. It's quite a significant control element as well. So what we have established for each new employee in the company, it doesn't matter if they are involved in the purchasing process or not. Everyone, the first thing they do the initial onboarding and training, and the first thing they do complete this anti-corruption e-learning It's very practical, like what the bribe is, what the conflict of interest is, what you shouldn't do, what you shouldn't accept from other employees or external parties, what are the consequences if you do, what you have to do if you spot something suspicious, what to report, whom to report, what is to be considered suspicious, what is the whistleblowing program, which is important as well, etc., etc. So basically, everyone has to complete this e-learning before they start to work, and I think it adds to the knowledge and it builds the company culture as well on that. And I think that specifically the whistleblowing program is a very significant control element for public sector, especially. It should be explained properly to employees so that they know they are safe, they know that they are anonymous, and they feel protected in case they have to report something. Also, as the internal control element is a code of ethics, code of conduct. Everyone should know what's that. Everyone should should familiarize themselves. Everyone should sign that they have read and understood, because that's how you build the understanding of the employees, of the staff, and it raises awareness as well. I think the more the employee is trained and the more information is given to the employee, what is good and what is bad, the more they build on the corporate culture with that. When it comes, maybe let's switch a bit from bribery to conflict of interest, which is also a part of corruption, unfortunately. We have implemented two quite strong preventive procedures for the conflict of interest. One is basically determined by law. Everyone who is involved in public purchasing process, in a procurement process, is considered, with the signing power, is considered to be we call it official. And the person who is official, they have to submit annual income statements, and these are public. So basically, what you have, again, just to clarify, it's applicable to public sector. It's government and municipality and their companies, their own companies. So basically, what you submit as this official is the report which shows all your property, like what kind of real estate you have, when you bought it, how many cars, what cars, what was your salary for the last year, do you have any loans, did you give any loans, did you have any loans repaid, what is your cash accruals, bank accruals, and so on. So basically, it's quite transparent, and you do submit the initial declaration when you start as an official, and then you submit it every year. So basically, if you want to get something, you should think how to put it, like how to make it official, how to make it look good. And this is what you have to, it's an obligation to do that. And I think it prevents quite many people from thinking, let's say, left side. Let's put it like this. And I think last but not the least, it's also quite a good procedure to consider is what we do in case, for example, me as an employee, I do want to work somewhere else in evenings, weekend jobs, supervisory board for some other company which does not require the full employment, own family business. What I have to do is I have to submit the report to my direct manager saying I want to start to work in this and this company, in this and this position, please approve. So first my direct manager approves. For those who are those officials, it's a risk manager who approves as well. So they do investigation. If there is no conflict of interest, if the company I want to work for maybe is our supplier or somehow else involved. So when it's clear, you can do only after it was approved. So you can apply for this other position. So I think, just to wrap it up, I think it's indeed it's a company culture you build all together, and the more preventive methods you have, the better. It's easier than to battle the consequences, I think.
Yeah, definitely so. And the fact that you mentioned, for example, anti-fraud training as part of the fraud prevention, this is important because basically for people to be able to, for example, detect fraud, they need to know what it is, right? And typically this is missing. So like basic thing, but quite an important one. And regarding the one that you mentioned about being transparent for the public officials, basically one of the key red flags is also living beyond the means, right? So the person is owning this amount, but then lifestyle is like that high. So basically, this is also if this is transparent, then the person starts living beyond the means. Then it's a good sign for someone, for example, the journalist, the media, to see it because they see they have the access to the declarations, right? So it's easy to find this misbalance. And partly as a joke, partly from my experience, I know that typically the public officials in some countries, they are the most lucky ones because all the these online casinos and everything, they always win. So this is like a source of income that typically is on a declaration. They're super lucky. They buy a lottery and immediately they win a big amount. So talking about the
Exactly,
declarations.
exactly.
Yeah, sorry for this side joke, but basically going back to the anti-fraud controls, I would like to refer to Cedric. Basically, like being a CEO of IA Belgium, so what do you see on the market? So what anti-fraud controls do companies typically implement and they work? And how does it help also to decrease the impact of the fraud risk? So what anti-fraud controls actually work from your perspective in practice and also in terms of internal auditors? So how should they approach these controls? Should they approach anti-fraud controls in the same way as other operating and financial controls, or like treat them separately? So what's your take on that?
Okay. So yeah, like I mentioned, it should be embedded into the day-to-day work. So I strongly believe that we shouldn't do specific fraud audits unless there's a company-wide issue or anything. But otherwise, I would say embed it in your organization. So anti-fraud controls where internal audit has an impact is surprise audits, because I love the data in the report to the nations. Surprise audits reduce the median loss and the duration by over 50%. So that's a huge reduction. Now, I'm not saying you should spend the whole year doing surprise audits because you won't make a lot of friends in the company, but make sure there is that aspect of surprise in your audits. Make sure there is some room, some flexibility, 10, 15, 20% of your annual audit plan where you can do surprise audits. And then, of course, the most effective one, because it's most frequently reported through a tip. So make sure there is a hotline or some form of way where employees and vendors and customers and basically any stakeholder can report suspicious activity. And then the fraud awareness training was already mentioned. But again, make sure that it's not just to tick the box. So if your company has a fraud awareness training and it's a 30-minute annual webinar where people won't even listen, click through and answer three questions where they already have the answer to, then it's not an effective control. So again, test beyond the control. So, and then tone at the top, I think is really important. But what internal auditors often forget is the tone at the middle, because that's what people in operational jobs, they often don't see the top. So for them, the top is the middle. So make sure that the tone at the top, cascades down in the organization. So I think that's a really important one. And then something that's often overlooked also because it's not that easy to audit is, I would say, auditing culture. Or auditing, because culture sometimes is a little bit of a sensitive topic, auditing organizational behavior. And I'm the CEO of IA Belgium, and in Belgium, we're not that far ahead yet. If we look at, for example, the Netherlands, which is very close to us, but it's in the majority of the companies, it's really embedded in their day-to-day audit programs. Also, IIA Netherlands has a very, very interesting publication, also available in English. I think it's free for everyone, or for members at least, but I think it's free for everyone, about how you can reduce organizational risk, including fraud risks, by auditing culture. So I think that's a really, really important one for internal auditors. So yeah, auditing culture, the psychological safety, people need to be able to speak freely. We don't need to act as the police. We need to act as a partner for the business. So they need to be able to come to us, but also make sure that the company's environment is safe enough to speak up. Because if you have a hotline, but then also autocratic leadership, where people have fear of retaliation and so on, the hotline probably won't be very effective. So make sure that the right culture is there also for the other controls to thrive. So it's a mix of hard controls and soft controls, where they will be most effective, and that's where internal audit can play a role.
Yeah, definitely. So I also heard talking about the whistleblowing and this approach. I mean, this is very American approach. So they pay the whistleblower certain percent of the. So if they found some corruption and they stop certain corruption and this saves the organization, for example, 1 million, they pay 100K to the whistleblower. I'm not sure if it's the best way to motivate people, but I mean, this works in the USA, probably not the best case for Europe, because we're more, let's say, motivating people to do it from the value perspective, from the ethics perspective. US does it differently. I mean, just as an example, I don't know if you've seen it somewhere else.
Yeah, so I've never seen like bonus schemes for reporting fraud in the companies that I worked with, but indeed I worked at the global company before, and we would see that even though the sales was, let's say, more or less evenly spread across the globe, and the revenue was spread across the globe, employees were evenly spread across the globe, we would see that 60 to 65% of the tips that came in came from the US. So it's less, and again, that's also a little bit cultural. In other continents like Asia, you will just get less people to call a hotline to have a tip on a colleague. In the US, where it's maybe a little bit harder, Europe was kind of in the middle. So we see different cultures play a role, and make sure you adjust the ways also of a hotline. Not everyone is comfortable making a phone call. Not everyone trusts that the email is actually anonymous if you go through a specific system. So make sure you have different ways and take those cultural differences into account as well.
Yeah, that's a good catch. About 60 or 65% coming from one country. I don't know if the bonus scheme works. So anyway, moving forward to some maybe modern, let's say, types of fraud, I would like to refer to runners, because I know that as an expert in the financial and banking services, you might have some experience with, for example, crypto-related financial crime, which is becoming, I think, more and more typical these days. But also maybe if you have some experience with AI-enabled fraud or ESG-related fraud, so let us know in this, let's say, modern fraud that just evolving now. How does it work? How can we prevent those types of fraud?
Yes. So first of all, there were some interesting comments in the chat that if the owner is directly involved in the management process, is the fraud risk lower? Well, it can be pretty high if he is like very aggressive, but it also, if he's like more to the honest side and more long-term thinking, then of course it's lower. And my personal intake is that the business guys, the management guys, should all go through some training, some risk training, some fraud training, etc. So they are well aware of the risks and they understand what the internal audit or risk guys talk about, right? And that kind of makes them liable also when something bad happens, because they cannot say, "Oh, I'm not into risk. I don't understand risk." So that's my take about a little bit about risk management. About the new risks, so crypto risks, etc. I think crypto is not so bad. Maybe people are afraid of crypto because they don't understand crypto. At the end of the day, if you look simply at crypto, it's just you can look at it as financial instruments. Right, as the same as maybe money. You have like stable coins which fluctuate the same as US dollar, and of course you have some more interesting financial crypto coins, but then again you have also interesting financial instruments like shares that are not publicly traded, traded over the counter, meaning for these financial instruments you cannot determine their price based on market price. It's based on valuation, and the same is with crypto. So crypto, well, I kind of had a discussion in a university about crypto fraud, etc. And the conclusion we had that if crypto is used as means for exchange, for buying goods, etc., the risk might not be so high. The risk becomes high when you cannot determine the source of funds, the source of wealth of your crypto wealth. Let's say you cannot prove where did you get your bitcoins from, or you say, well, I got these bitcoins from my successful speculations. Good, but you have to prove that. And if you cannot prove that, well, then of course you might have used some mixer services. A mixer service is that where you hide the traces of the origin of your cryptocurrency. What does mixer service do? It's like, let's say you put in 1 Bitcoin, you mix it, and you get like 1 million Bitcoins at the like 0.0001 from different wallets. So you instead of 1 wallet, you get million wallets, and it's very hard to trace back how where do the funds come from. In cryptocurrency world, of course, there's blockchain, and based on blockchain, you can identify each and every transaction. But let's say you steal 1,000 or 10,000 and use very complex mechanisms. It's not very cost effective to identify where is the money coming from, because it takes a lot of time and resources. So of course, if you steal 100 million, then somebody would be taking time to identify where, what did you use, what kind of mixers or what wallets did you use in order to launder the money or commit fraud. Also corruption, right? So how do you identify corruption? When you get some benefit, right? Or maybe you get some money that comes into your bank account or whatever. And with crypto wallets, if somebody like, I don't know, if you want to make a government, win a government contest and just send funds using a cold wallet without exchange, then maybe nobody will be able to identify that. So crypto, of course, is being used in fraud, in corruption. But if crypto is regulated and you use regulated exchanges, etc., then it's, in my opinion, very similar to financial instruments and cash. So in terms of artificial intelligence, etc., I know there's this risk of deep fake. That, for example, now it's not Renars Degro talking, or maybe I'm just relaxing and drinking beer and I made an avatar or something. Maybe it could be done on Zoom, but if you are conducting if you want to open a bank account or a account in a payment institution or in Revolut, and you conduct this facial, you scan your face, right? Those that have done it know what I'm talking about. You just make a selfie, a sophisticated selfie, and there are mechanisms that try to identify whether this session is continuous, etc. and there are service providers that are very good at it. So if you're, let's say, if I'm, I don't know, want to conduct some business with a financial institution, and this financial institution allows remote onboarding, and they say they have created some state-of-the-art remote identification solution. If they state that, then maybe the risk on them from my side would be higher. I would give more assurance to some third party that is professional in this area, has done some certification, some external audits, and that is their main business, selling the service of remote identification. And there are companies like that doing that. And of course, there are financial institutions that have developed a remote identification solution tool in-house. Maybe it's cheaper for them, etc. But then the risk of deep fakes would be much higher. And one of the colleagues also mentioned about cultural differences, and I truly agree with that. That for Asian part of the world, I think they don't. Nothing bad ever happens to them. They don't report risk. Everything is good always for them. And what are you talking about, right? So. Cultural differences need to be taken into account, and it's not only Europe that is doing payment institution business, etc. There are huge markets in South America, in Asia, and I think their risks are a bit higher because of these maybe cultural differences, and they are very aggressive towards business, etc. So in terms of ESG, I think ESG risks are more related to Europe, because Europe worries about the environment. And it's, from my experience, where I talked with some industry professionals, and maybe there are some ESG professionals here, everything is done based on reporting. So you conduct business, you have cars, you have factories, etc., and you have to account your CO2 emissions. And how do you account them? Well, it's up to you. It has to be reasonable, etc. But then again, when I hear a word reporting, I know there's opportunity for some interpretation in your own way of these reporting standards, of reporting requirements, and you can maybe manipulate a little bit all this data in order to show that you're more ESG compliant than you are in reality. So there's definitely, I would say, ESG reporting, misreporting risks are very high, and particularly due to some unified standards of ESG reporting. Something similar that I think there should be like international standards of ESG, or like there are international standards of reporting, etc. So to sum up, I think ESG risk is high in Europe. Deep fake and artificial intelligence risks they are present in Europe, but I think they are much higher in less regulated environment country parts of the world. And cryptocurrency, I think it's not so scary once you start to learn it and understand how it works. That's it.
Yeah. Thanks a lot, Renars. I would add a couple of points. So regarding the ESG reporting, this is, as used to be with financial reporting. So before we had a lot of gaps, like US gap, UK gap, and some gaps in Europe. Then IFRS came into force, right? And now I think the IFRS is becoming more and more typical. I would say that even companies which can report in a different manner, they typically still translate into IFRS to be comparable, right, for the investors. So I do believe that this trend will also come with the ESG reporting, because we used to have ESRS, GRI, so different standards, but now looks like CSRD is the one that will consolidate all these standards, and now it became mandatory in Europe. So I think CSRD will become a golden standard globally, but it will need to take time. And also with the greenwashing directive that was already voted by the European Commission, still I think not enforced, but will be enforced in the next year or two. So now you cannot say when it will be enforced, you cannot say in your advertisement that my product is I don't know, green or is sustainable, unless you do certain checks. So this, you need to prove it. So you cannot just say it, because now you can say that it's sustainable just because you say it, right? And with the greenwashing, you will have to pay a big fine. So let's say it will be a big game changer, at least in Europe. So yeah, definitely some changes are coming. And yeah, thanks for referring to the question in the chat. I will keep it also to the Q&A session, because I think this is a little bit a Pandora box regarding an owner actively involved in running the company. Is it helping or not helping in terms of fraud? So let me open this Pandora box during the Q&A, but this is a very hot topic. Good. So let's move then to Konrad. So we discussed about different types of fraud, about the prevention mechanisms, about the detection mechanisms, and I would like to ask you maybe to give us a practical example. So how does a typical anti-fraud project looks like? So could you maybe share with us some examples, maybe from your experience? So what actions are typically taken during the anti-fraud project? So what is being checked? What kind of red flags? Who does what, who is involved, how does the report look like, and what typically such project is finished with? Just a report, or maybe some prosecution, or maybe rebuilding stakeholder confidence? So maybe walk us end to end through the anti-fraud project, if you could.
Okay. Well, first of all, sorry to say, but there is no such a thing like a typical anti-fraud project. This is just because that frauds differ so much. And secondly, because there are so different expectations from the organization towards you. And also because the role you play in the organization could be also very, very different. But in order to address this question, maybe I would present a perspective from three types of projects. So the first type would be the fraud investigation. So the situation where you know that there is a fraudster out there, and your role is to find him and to bring him to so-called justice. So a sheriff role. And in this case could be sometimes quite easy, because for example you can watch the footage from the crime scene to identify who is stealing from you. But these cases are rather very rare. So normally you will have a situation when the fraud is committed because of a gap in your controls. Then you need to have a thorough understanding of operating systems, probably with some expert industry knowledge. So normally, as internal audit, you do not take part in this kind of projects quite frequently. You could have some supportive roles in this respect, but the key role is to someone else. I myself had a chance to participate in a very few instances in this kind of investigations. But still, the factual setting is very complex, and secondly, it is confidential. The data are quite sensitive, so sharing these situations with you could be controversial. But instead, I could provide you with the rather positive example. A few months ago, a board of a company requested from us an audit. So the board's concern was decline in profits, allegedly caused by exaggerated expenses generated by the management. It was about personnel costs and also some IT costs. So we went carefully, item by item, mostly on the IT expenses side, and we didn't find any unjustified positions. So the drop down came out of the market, not from the wrongdoing of the management. So this is an example showing that we could have also a positive role clarifying or justifying management and proving that they were not doing anything wrong. But another type of projects that I've been involved in are projects looking into the organization's arrangements, so to say, on anti-fraud. So they are built upon existing risk management frameworks like COSO, CIMA, ISO, or others. And they're trying basically compare existing setup with the required one from the framework. So what you do is you look at the existing policy, then review whether there is a right fraud risk assessment in the organization, see what kind of a preventive and detecting controls are in place, how the reporting communications lines look like, and figure out whether the whole system is properly monitored. So this is kind of a comprehensive approach. But instead of it, you could pick up one or two elements of this approach. For example, you can pick up a hotline just to review whether it's working okay or not. And I can recall that myself that a few years ago we were requested to review such a hotline. Because the board didn't get much information from the hotline, and it was concerned that it might not working as required. So actually, we didn't want to take it because we had very scarce resources. We didn't have time, etc. We didn't regard it as very important. So we decided to limit our works as much as possible. So we filled a dummy fraud notification into the hotline, waited a couple of days, and then we requested from the responsible person a full list of fraud notifications from the last quarter. And what happened? To our surprise, our dummy notification was not there. So, and this was an evident proof for the board that the system is not working. So, kind of a stress test, so to say, similar to what Alex presented us before with the go in and out through the security check. The third type of project I was involved, and probably which is the closest to average internal audit team project, would be the regular risk assessment, either in the context of typical project or consultancy. So this means that apart from operational, business, compliance, regulatory risk, you need to also consider typical fraud risk. But this also, of course, depends heavily on the type of the business you are involved in. But there are some comments on the chat about the frequency of different fraud risks that appear. The comment was about procurement as a typical area in which you could find fraud risk. And I agree. So when you perform a risk assessment, for example, for procurement or purchasing processes, what would you have? You could have the risk of a conspiracy between salesman and client, of course, but this is the other side. But then the scenario would be lower price for a bribe. And in the procurement, as such, you could find also a conspiracy between a buyer and a provider, and then the scheme would look that there is a higher price for a bribe, and of course you need to consider this in your risk assessment. other risks, normally they involve larceny, which is a theft, basically. And you need to look for objects which are of high value but small size, for example, or they are easily they are placed in easily accessed area. So once you identify such fraud risks, what you should do next is, of course, to assess it, to identify possible scenario for committing such a fraud, and then you need to evaluate the existing controls, and if there are not enough, you need to, of course, propose some additional controls based, of course, on actual residual risk calculation. So this how it would look like. Just to sum up, I think it is crucial that you, of course, you rely on regulations, on internal, on external regulations, and you need to check whether you comply with this. But reality life is that you are tipped off by someone, which is hotline normally, or a coffee machine, as Cedric mentioned before. Hopefully, it won't cause you a heart attack. So this would be the first case, and the second is try to perform kind of a stress test. Just make a dummy fraud notification. Try to breach a security check or whatever, which makes your testing more real life based rather than regulation based. And this is my message, and this is my standpoint. Thank you.
Thanks a lot, Konrad. Really, it's possible to see like a big practical experience behind what you're saying. So with that, I think let's move to the summary. And since we have only 9 minutes, let me make it very brief. I will not go through all the slides, but just the key points, and then we'll leave maybe 5 minutes for Q&A because we have 3 questions. So maybe if somebody would like to ask, this is the moment to ask additional questions via the chat. Okay, so let me maybe go back to the slides for a moment. Okay, so what I wanted to highlight regarding the red flag. So there was also a question on the chat. So here are some specific examples of the red flags. You have more in the report to the nations, but basically just to give you an example. For example, for the financial statements fraud, so you might have absence of primary document that support the transactions booked. So this is a definite red flag. You can see transactions, for example, that are posted very close to the so for example, transactions posted in the closed period. So somebody reopened the period and made the adjustment. So typically for that, you need to have special approvals because this is not the behavior we want to see in our accounting team, and so on. In terms of the asset misappropriation, I would say that the most typical one is if we see that the raw material consumption is determined by the reverse count. So we do not record the actual consumption, but at the end of the month, somebody counts what is left in the warehouse, and by that they say, okay, everything else was consumed. So this is a red flag because we would not be able to identify what was actually consumed and what was maybe misappropriated. For the general types, I would say that, for example, unreasonable or excessive concentration of key power in one hands, whoever it is, might be a top manager, might be the owner. So we need to have the proper governance mechanism in the company because if somebody has too much power, can adjust any transaction, there is no control over that person, then we could immediately land up in the financial statements fraud with the major adjustments in financial reports and budgets. So you see, it's intersected. And for example, sudden refusals to cooperate with audit staff and changing the explanations in terms of the audit. So a person saying one things, but then in 2 days' time they're saying it's like something totally different. So this kind of behavior are types of general red flags. Of course, it doesn't say that somebody is guilty, but it motivates the auditor to go deeper in the details with the responsibility of this specific person department. So those were the examples. Fraud 3. So here you can see different types of fraud schemes. I will not stop here in more details. You can see it in the report to the nations. Just for you to know that in order to conduct a good fraud examination, you need to know what kind of fraud schemes actually exist to be able to identify that and to invest your resources properly. This is a split of different fraud types per the industry. So you can see where the color is darker, the probability is higher. So once you know the industry your company works in, you could already put the focus on a specific fraud types that are more typical for your industry. Again, more details are available in report to the nations. And then to summarize some key takeaways from my side before we go to the Q&A. First of all, fraud is a material and widespread risk. I think we already saw it. The most comprehensive and effective fraud prevention solution are actually the implementation of dedicated internal controls. The role of internal audit is to identify the red flags or gaps in controls and then to recommend the implementation of necessary controls. But the design and implementation of the specific anti-fraud controls is of course with the specialized internal control team, or if there is no expertise internally, that could be outsourced to the external anti-fraud internal control experts, because internal audit cannot do that as they would lose independence, which is not allowed by the global internal audit standards. So in a nutshell, we understand that this is material, the fraud risks are material. We need to have specific knowledge. Either we obtain it internally or we need to reach out to the external consultant who has the specific knowledge. With that, I would like to thank once again to the panelists for a very good discussion. Here are the contacts, and I welcome all the participants to stay in touch with us. And let me move maybe to the Q&A session. So maybe let me briefly reply, and then we go into additional replies from the panelists. So first question I see, can you explain the measures to be taken in order to establish the fraud without getting misled by the technical staff? So I would refer to the red flags. So we already saw some examples. You can see more in the presentation. If you see the red flag, then I would recommend to go deeper in this specific area and involve the forensic auditor on board who is understanding how to properly document what we find, how to have the proper chain of custody. Okay, next one is, in my opinion, the most risky areas for fraud are procurement, construction, and renovation. Well, based on the report to the nations, procurement definitely, but overall operations is there, and procurement is considered part of operations by the ACFE, and apart from that, finance, because financial statements fraud is quite material. So operations and finance. Okay, regarding the owners, so I think here we would have a small discussion. So do we agree that the organizations where the owner is directly involved in the management process, the risk of fraud is lower? Well, it depends, because again, if we see the red flags, so if somebody has excessive power, then it might actually create a problem. And when the owner is actively involved, maybe the asset misappropriation risk is lower, but there is a potential to have financial statements fraud, to make the financial result look a little bit better. And I already saw these cases in my practice, and I know that, for example, private equity funds and financial institutions, they look at the governance. So they want, if the owner is there, they want to have the counterbalance that the management board has the proper standards of behavior, the proper corporate governance, and this overriding of controls even by the owner is not possible. So in my opinion, it depends if there are good counterbalance measures in place. If there are no measures, then probably too high involvement of the owner is not good. If the countermeasures are there, it might be it might be rather positive than negative. Any other thoughts on that by the panelists? What do you think? How does it look from your experience?
No, I agree. It's not necessarily the fact that if it's privately owned or not, it's all the other things around it. And that can really vary by company size, industry sector, and so on. So I agree.
Thanks, Cedric. Yeah, I have a question. Will the presentation be sent? Yes, it will be sent by email together with the materials from the partners of the event, from the panelists. Okay, I see that we are out of time. And with that, I would like to close this event and with big thanks to the panelists and to the participants. So thanks a lot to everyone for making this event happen, for your expertise and for your time. Thanks a lot to everyone. And yeah, if you would like to say a couple of words, the stage is yours.
Yeah, thank you. Thank you, Alex, for inviting us. I think it was pretty informative and it was a very interesting discussion. And the good thing is we are talking about different aspects, but we are on the same page about the topic. So it works. Thank you.
Thanks a lot, Karina. Okay, good. Then once again, thanks a lot to everyone. I said presentation and the CPA certificates will be sent by email to those who have actually visited the event. So I've seen the list of the participants. So please give me some time and I will send everything in a couple of days. With that, thanks a lot and happy Midsummer Eve to those who celebrated today. Thank you. Goodbye.
Thank you.
Thank you
Bye-bye.
very much. Goodbye.
Bye-bye.
Bye bye. Thank you.
Bye.